The euro and the British pound gained strong upside momentum against the US dollar on Thursday. Moreover, they have every chance of extending their bullish run today. The risky assets were supported by yesterday's strong US inflation data, which suggested that the Fed's policy shift is just around the corner. The US Consumer Price Index fell by 0.1% from May and climbed by 3% from a year ago, while economists had forecast the CPI ticking up 0.1% month-on-month and gaining 3.1% year-on-year. Core consumer prices rose by 0.1% in June. In the 12 months through June, the core CPI increased by 3.3% following a 3.4% rise in May. That reinforced expectations that the US Central Bank would cut interest rates in September, putting pressure on the greenback. The British pound was also backed up by UK GDP data. Despite tight monetary policy in the country, the British economy expanded by 0.4% in May. Over the 3 months to May, the economy grew by 0.9%, beating analyst forecast. Today's macroeconomic calendar includes a batch of inflation data from the euro area member states such as France and Spain. However, the focus of the market participants will be on statistics from the United States. US producer prices are expected to rise by 0.1% month-over-month and 2.3% year-over-year. If the indicator falls, the euro and the British pound are likely to end the trading week with gains. In addition, the University of Michigan's preliminary indices on consumer sentiment, inflation expectations, and current conditions are due out on Friday. If the readings are revised downward, the US dollar will come under more pressure, thus contributing to a continued rally in the risky assets. The more those wishing to sell the greenback, the harder it will be for it to dip against the euro and the pound sterling. We cannot rule out a scenario where the market could see a downward correction as traders lock in profits. Therefore, one should be careful when going long at current highs. Now let's move on to technical analysis. According to the 1-hour chart, the euro-dollar pair has gained 50 pips. Currently, the pair is trading at 1.0874, the middle of the sideways range. If the price breaks through and consolidates above this level, the euro will have a chance to hit a 1-week high, rising above 0.899. Consolidation above this mark will drive the price up to 1.0942 and even 0.960, where I recommend going short on the rebound, expecting a 25-30 pip move. Short positions at 1.0899 and 1.0874 can only be considered as a false breakout. In this case, the market is likely to slide to 1.0846 as part of a correction before resuming gains. If the price breaks through and fixes below this mark, the market will face a sell-off, with the euro diving to 1.0813. At this level, it would be wise to go long on a rebound to catch an intraday correction of 25-30 pips. As for the British pound, it is currently trading about the middle line of the sideways range. A false breakout at 1.2899 will generate a buy signal, pushing sterling to a new 1-week high, the area of 1.2945. If the price rises above this mark, the British currency will extend gains to 1.2990 and probably 1.3032. At this level, traders are advised to go short on a rebound, counting on a 30-35 pip decline. Going short at 1.2945 will only be relevant after a false breakout. Alternatively, short positions can be opened after the price breakthrough and fixes below 28.99. In this case, the pound sterling is expected to dip to 1.2870 and even 1.2849. At the level of 1.2849, traders can go long on a rebound to catch an intraday correction of 25-30 pips. Going long at 1.2870 and 28.99 can be considered following a false breakout. Good luck and have a nice weekend.